Hi everyone, welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's video we're going to talk about the EURUSD, the Pound USD, the Dollar Yen, the New Zealand Dollar versus the USD, and also gold. That's one I haven't talked about in a while, but you are going to want to keep an eye on this pattern I'm about to show you. Let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we begin, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. So the first currency pair we're going to talk about today is the EURUSD. And I mentioned this one a couple times recently, including last week, where we were watching for a bounce from this 109.90 to 110.20 support area. So notice how both of these are key horizontal levels based on recent price action. And 109.90 was especially significant because it was where the pair bounced earlier in October. So remember that we had this breakout of this short-term downtrend right here on this candle. So once the pair broke out there, it then rotated lower, retested this level right here, and it also retested 109.90, which is again a key horizontal level. So this 109.90 area was significant, and it's one I mentioned a few times recently that we were watching for. So this low on Thursday was 1 pip below 109.90. Furthermore, if you notice, the range on Thursday was actually a bullish engulfing candle. So the high and the low of Thursday engulfed the high and the low of Wednesday. And this right here is a buy signal that I look for, just like a pin bar. So myself and other Daily Price Action members were able to get long here right in the 110 area. And the reason I bought this early is because I saw on Thursday, I saw the pair come down, retest 109.90, start to bounce, and then right through here, there was a sudden surge in demand. And when I saw that, I decided to buy with a small starter position with the idea that I would add to it as we got to close back above 110.20 and perhaps back above 110.70 sometime this coming week. So for the week ahead, I do want to see the EURUSD stay constructive and continue to push higher. So I don't want to see the pair rotate lower and come back and retest 110.20. I want to see it stay above some of these recent lows and highs. So notice how if we just look at these candles through this area, notice how we have this low and these two highs. So right around 110.30, perhaps 110.35. So I do want to see the euro stay constructive, and I want to see buyers continue to push the pair higher this week up into that 110.70 level. Now, just based on the price action here at 110.70, this is going to be a key battle zone for the EURUSD. So I do expect sellers to come out and try to defend 110.70. And of course, it's going to take a daily close above that in order to expose these recent highs up around 111.70/80. Alternatively, if we do see the euro start to rotate lower and weaken, and also start to take out some of these new support levels, especially 110.20, so if it starts to crash and it re-exposes 109.90, I do think that would be a sign of weakness. However, as I mentioned last week, it's going to take a daily close below this ascending channel support in order to negate the bullish scenario. And if that does happen, if we do see a close below this support area, it would also re-expose some of these year-to-date lows around 109. Next up, we have the British pound versus the USD, or GBPUSD, and this is one that is still consolidating between 127.70 and 129.80. So I've talked about this now a couple of times, including in last week's video. Notice how ever since the pair broke above this 127.70 area based on this low back here, as well as several highs. Since the pair closed above this level, it has been consolidating for a potential push higher. So I also talked about 127.70 in the last few weekly forecasts, and I mentioned that I did expect buyers to try to defend 127.70 as support. So notice how this recent dip into that level did catch a bid and pushed higher. However, it is still going to take, in my opinion, a break of this range before we really see the pound start to move again. So if we see a daily close above this area just below 130, it would expose 131.70. So notice how we have several highs through this area. And if we see a daily close below this 127.70 support level, it would expose 125.70 based on several lows back here, as well as this high, and then also this bounce from 125.70. So as of right now for the British pound, I'm just watching and waiting to see which way this decides to break. I will say that based on this short-term uptrend, so we have higher lows, this is a potential higher low, but we also have this higher high recently. So based on this short-term uptrend, and also based on the fact that we had this 800 pip rally and buyers are refusing to back down. So since we had this rally, the pair has consolidated nicely above 127.70. So right now this does look constructive for the British pound. So I'd be really hesitant to try to sell it even if we get a close below 127.70. Ideally, I would like to see this consolidation continue and eventually break that area just below 130. Next up, we have the dollar yen or USDJPY, and this is another one that we've been looking at for quite some time. More specifically, we were watching for a break below this rising wedge support. So this pattern did hint at exhaustion from buyers. However, if you read my recent posts, I said that we also had this conflicting bullish signal based on this potential inverse head and shoulders. So notice how the neckline of that pattern is technically still intact. So remember, this was the left shoulder back here. We then had the head and the right shoulder. Now the pair broke out here, retested the neckline as new support, moved higher. However, then it crashed back down to the neckline, retested it again. And so that leaves us with this indecision between breaking below this bearish pattern and also staying above this potential bullish pattern back here. However, despite these conflicting signals, I did mention a week ago that I favored the bearish scenario simply because even if the dollar yen had closed above this wedge top, I don't like to buy upside breaks of ascending channels or ascending levels because they do tend to trigger bull traps. So a lot of times with a level like this that is ascending, if you get a close above it, and even if the market breaks higher, a lot of times you'll then get an immediate crash back below that level. You'll also a lot of times get something like a weekly pin bar signaling the supply above that area. So remember that upside breaks of ascending levels do tend to trigger bull traps and a reversal lower. So even if the dollar yen had started to close above this level and make good on that inverse head and shoulders, I was more interested in a move lower. And we got the close below wedge support on Thursday, and we also had this retest on Friday. So as we begin the new week, the dollar yen is technically staying below this wedge support. So it retested it as resistance and it closed the day just below that level. But it's going to be key to see sellers come in early this week and start to push the pair lower. if we see the dollar yen start to hover just below this new resistance level, that could be a sign that this was a false break and a daily close back above this 108.96 area. So that was the close here, as well as this close and subsequent bounce. So if we see the dollar yen start to close back above this 108.96 level, that could signal that this was a false break, and it could also send the dollar yen higher. But as long as we see the pair stay below this wedge bottom, so right around 108.80 for the coming week on a daily closing basis, remember that I use New York close charts so that each 24-hour session opens and closes at 5 p.m. Eastern. So see the description of this video for a link to the charts that I use. So if we see the dollar yen remain below this level, it would still expose some of these lower levels, including that 106.80 support level that we've been talking about now for several weeks. Next is the New Zealand dollar versus the US dollar, or NZDUSD. This is one that I wrote about on Friday as one to keep an eye on for the coming week. So we've had this inverse head and shoulders that has been playing out for some time, and we're just waiting for confirmation. So back here, we thought that this was going to be the right shoulder. However, notice how the pair came up, retested the neckline, formed this bearish rejection candle, and then formed this next engulfing candle, which did hint at a pullback into this support area. So just because this low formed recently does not mean that this potential inverse head and shoulders is negated. So a lot of times these patterns are not always clean, and they do get a little bit messy before they are confirmed. Now, that does not mean that the New Zealand dollar is going to push higher this week or next, but I do think that based on this left shoulder down here, the high, and this right shoulder area, that we do still have to respect the potential for a push higher from the New Zealand dollar if we see a daily close above this neckline. So remember, I trade on a daily closing basis, which means I need to see the pair close above this level at 5 p.m. Eastern in order to confirm this inverse head and shoulders back here. So be sure to visit the link below in the comments section to get access to the same charts I use. So those are going to be the same charts that you see in today's video to make sure that you're using a New York close chart, and to also make sure that every one of these daily candles right here, so this candle here, this candle, every single one of these candles is a 24-hour session. So that means every week you're going to get 5 candles instead of the 6 candles that other brokers offer. As for the NZDUSD, it is going to take a daily close above that neckline around 64.30 to confirm the bullish reversal pattern. Until that happens though, do expect sellers to come in and defend 64.30 as resistance. So I'm just standing aside right now waiting to see if we get a close above this area. And I do also expect that any rotation into the 63.20 area to attract buyers. Now, if we see the New Zealand dollar rotate lower, retest this area, and eventually close below it, I do think that would be a sign of weakness, and it could also expose some of these lows from earlier this year. But again, as long as this pattern is intact and buyers are refusing to back down, I do think that we have to respect the potential for a move higher. A close above that neckline would expose 64.90 based on these lows back here, this low, and these two highs, with a close above that taking on the 65.80/90 area based on some of these lows back here and this high. Last but not least, we have gold, or XAUUSD. This is a pair that I haven't talked about for quite some time, and the reason is because of this choppy price action that we've seen now for several months. So this is the type of movement that I like to avoid, and instead I want to catch breakouts like we saw back here where the pair broke out and started to gain momentum. Or again, back here where we saw this sideways movement, gold broke out and started to surge higher. So these are the areas that I want to focus on instead of trying to trade this area through here, this area, or this recent price action, which is just consolidation. That said, it does appear that gold is holding above that 1450 support area that I wrote about several weeks ago. So notice how we have this high as well as this one right here before gold broke out. And you can see how last week buyers came in and supported gold right around that 1450 area. Furthermore, if we draw our Fibonacci's onto this recent rally, so notice how the 38.2% does line up with that 1445/50 area right through here. So as long as gold is holding above this area, it does seem that this consolidation we've seen recently could eventually trigger a breakout and a push back into these year-to-date highs up around 1550. So this recent consolidation also appears to have formed this falling wedge. It's a very slight pattern. However, notice how this low back here, this one, and this recent bounce do form the bottom of what could be a wedge pattern. And this high up here as well as this one could form the top. So I do expect any retest of this area to attract sellers. However, on the flip side, I do also expect any rotation into the support area to attract buyers. So as always, remember that I don't want to trade this through here or this price action or even this stuff through here. I want to trade that eventual breakout for a push back into year-to-date highs, perhaps even higher than that. So as of right now, it is going to take a daily close above this wedge top, just below 1500, in order to expose these year-to-date highs around 1550. Alternatively, a close below this wedge bottom would expose that next key support around 1380. However, just like I mentioned earlier in this video, I do dislike trying to sell downside breaks of descending levels like this, just like I dislike trying to buy upside breaks of ascending levels, because just like we talked about earlier, they do tend to trigger traps. So a lot of times you'll see a market close below a descending level like this. So it closes below, even if it does move lower for a little bit, you then often see a snap higher and a close back above that area. So that signals a bear trap. So just keep that in mind, that if we do see gold close below this descending level, that it could be a bear trap and could also trigger a snap back above that level. So ideally, I want to see this rally continue. So we've seen this consolidation, and I want to eventually see a breakout for that push higher up into the year-to-date highs. That's the ideal scenario. I'd rather see this play out than to see gold break below this support area and try to sell this market. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.